Imagine this. You're sitting at your kitchen table late at night, staring at your bank account, wondering how you're supposed to survive the next unexpected expense without sinking into debt. You see two conflicting pieces of advice everywhere. Some experts tell you to follow the 97 emergency fund rule, while others say, no, aim for $1,000 at minimum. Which path actually keeps you safe? Which one lets you sleep at night without worrying if your car breaks down or a medical bill shows up? In the next half hour, we're going to dissect both rules, compare them in real numbers, and I'll show you which one makes sense for your situation in 2026. This is The Hidden Guy, and if you haven't already, hit like and subscribe now, because we are diving deep into your money safety net, and the truth might shock you more than your last credit card statement. Let's start with the $97 rule. This is the one often recommended by frugal finance gurus, and it's surprisingly simple. The idea is to start small. You don't need a huge sum to get started, you only need 97. That's less than a weekend getaway or a new pair of shoes, and it's psychologically powerful. Why? Because you can fund it quickly. Within a week or two, you can have your first emergency stash. The logic is, you're not aiming for perfection, you're aiming for momentum. You build the habit of having a safety cushion without feeling overwhelmed. Imagine setting aside $97 today. It's small enough that it won't derail your budget, but it acts as a mental barrier against panic. Suddenly, if your car needs a minor repair costing $60, you aren't stressed. You've got a buffer. You can see why this resonates with people just starting out or with tight budgets. Now, let's contrast that with the $1,000 rule. This one is recommended by more traditional financial advisors, and it's a bigger safety net. Instead of starting tiny, you aim to accumulate $1,000 as your first emergency fund. It's not arbitrary. $1,000 is enough to cover most small to medium emergencies without relying on credit cards. Think about it. A car battery replacement, a doctor's visit, or a surprise vet bill, $1,000 usually covers it. But here's the catch. For someone living paycheck to paycheck, $1,000 can feel impossible. You might delay saving because you feel like it's too far away. The $1,000 rule prioritizes protection over momentum, while the $97 rule prioritizes getting started and building habits. So which one should you follow? Here's the nuance. If you're just starting your financial journey and your budget is tight, the $97 rule is a fantastic way to start. It's achievable, it's fast, and it creates confidence. You get that first taste of financial control, and from there, you can build up to the $1,000 level. On the other hand, if you've got some stability, maybe a steady job, predictable expenses, and no heavy debt, the $1,000 rule might be the safer choice. It's bigger, more protective, and can prevent you from ever having to dip into credit cards. Let's break it down with numbers so you can visualize it. Say you make $3,500 a month after taxes. Following the $97 rule, you can fund that in just a few days by cutting one or two non-essential expenses. Skip dining out, pause a subscription, or sell a few items you don't use. Psychologically, it feels attainable. Now, $1,000 isn't impossible, but it might take 3 to 4 months if you can save $250, $300 per month. That's a longer commitment, and some people give up before they reach it. This is where the $97 rule has a secret advantage. It's momentum-based. You start small, and small wins compound. But here's a scenario to consider. Imagine a sudden car repair costing $400 to $100. If you trade on the 97 rule and that S all you have, you might still have to borrow or shuffle money around. If you're on the $1,000 rule, you cover it without stress, and your emergency fund still has breathing room. So there's a trade-off. Speed versus security. The Hidden Guy always emphasizes that there isn't a one-size-fits-all answer. Your choice depends on where you are in life, your monthly cash flow, and how much risk you're willing to tolerate. Now, let's layer in a psychological perspective. Financial experts often overlook this. Starting with $97 gives instant gratification. You see your savings number rise, and that boosts confidence. Confidence leads to action. People who start with $1,000 sometimes procrastinate because it feels daunting, which ironically increases financial anxiety. So there's a behavioral element here. Momentum can matter as much as the raw number. The $97 rule wins in behavioral psychology. At the same time, there's a protective perspective. Emergencies are unpredictable, and sometimes small sums aren't enough. $97 might cover a minor parking ticket or a small doctor copay, but it won't touch a broken fridge, an unexpected vet bill, or a car accident deductible. $1,000 gives you breathing room. You can handle a $600 expense and still have $400 left. That difference between partial coverage and full coverage is crucial. The Hidden Guy often says, the goal isn't big just to survive one emergency. It's to survive multiple without panic. Here's another way to think about it. Imagine your emergency fund as a shock absorber. The $97 rule gives you a small cushion. It softens minor bumps. The $1,000 rule is a heavy-duty shock absorber. It smooths bigger hits. Neither is useless, but they serve different purposes. If your car needs minor repairs monthly, $97 helps. If a medical or household emergency hits, $1,000 protects. The smart approach? Let's talk practical steps. First, pick a starting point. If you can save $97 within a week, do it. Celebrate that win. Don't underestimate the psychological impact. It's huge. Next, automate savings if possible. Even $10 or $20 per week auto-deducted can grow quickly. Once you hit $97, keep building until $500, then $1,000. Make it gradual, achievable, and visible. Seeing numbers climb reinforces good habits. Another tip, track expenses ruthlessly. Many people fail to build emergency funds, not because they can't save, but because they don't know where their money goes. Use a simple app or spreadsheet and identify quick wins, unused subscriptions, impulse purchases, small luxuries. Redirect that cash toward your emergency fund. Even $50 a week can turn into a $1,000 buffer in 5 months. Now, let's consider risk tolerance. If you have dependents, a mortgage, or high fixed expenses, the $1,000 rule might be safer. If you're single, renting, and have a flexible lifestyle, the $97 billion rule is a practical starting point. Your personal situation should dictate the rule you follow. No one size fits all here. The hidden guy always stresses, financial rules are tools, not laws. Use them intelligently. It's also important to pair your emergency fund with insurance. If you have adequate health, auto, or renter's insurance, the $97 rule might suffice temporarily. If you lack coverage, $1,000 is non-negotiable. Your emergency fund is the first line of defense, but insurance can absorb larger hits. Think of it as layers of protection: starter fund, bigger fund, insurance coverage. Let's bring in real-life examples. I know a viewer, Sarah, who started with $97. Within 2 weeks, she had it, and that small win motivated her to save $50 every week. 3 months later, she had $1,000. Then she felt confident tackling other financial goals: investing, debt repayment, side hustles. On the flip side, Mark tried aiming straight for $1,000. He procrastinated for 3 months because it felt like a mountain, and during that time, a small car repair forced him to use a high-interest credit card. He learned the hard way that starting small is often smarter than aiming big and stalling. Another point to consider is emergency fund liquidity. Both $97 and $1,000 should be easily accessible, ideally in a savings account separate from daily spending money. You don't want to raid your checking account and fall behind on bills. Accessibility reduces stress and keeps you consistent. Now, here's a secret many experts overlook. Your emergency fund doesn't have to be all cash immediately. You can have a hybrid approach. Keep $97 liquid for immediate access, and the rest in a slightly higher yielding account, as long as you can access it within 24 hours. This gives psychological comfort and financial efficiency. The hidden guy calls this the tiered safety net approach. Small liquid buffer for panic-free response, larger buffer for bigger emergencies. Here's another way to frame it. Think about probability. Minor emergencies happen all the time, major emergencies less frequently. The $97 rule covers the frequent small events. The $1,000 rule covers the rare, costly events. Together, they give you near total coverage. If you follow this combined strategy, you sleep better, avoid debt, and gain confidence that lets you focus on growth rather than fear. We also need to talk about mindset. Some people think, if I save $1,000 first, I can start investing later. Others say, I'll start small, then grow, then invest. Both work, but starting small has a motivational advantage. You see results faster, reinforcing the habit. Compound effect works on psychology as well as money. Finally, a reality check. The world is unpredictable. Inflation, sudden bills, lifestyle changes, all hit your finances unexpectedly. Emergency funds aren't about achieving perfection, they're about resilience. $97 is your starting line, $1,000 is your safe zone, and both together create a financial buffer that lets you respond calmly rather than react emotionally. So here's the takeaway. If you're struggling, start with $97. Build momentum, celebrate wins, then grow to $1,000. Protect yourself, automate your savings, track expenses, and keep your fund accessible. Pair it with insurance where possible. And that's the hybrid, practical, Nate-inspired approach. The Hidden Guy recommends for 2026, you'll sleep better, handle emergencies without stress, and eventually use the confidence you've built to tackle bigger financial goals, investing, paying off debt, or building wealth. If this advice resonated with you, drop a comment below telling me which rule you're starting with, $97 or $1,000, and why. Share this video with friends or family who need to stop stressing over unexpected bills. Hit like and subscribe if you haven't already, because there's more practical financial advice coming your way from the Hidden Guy, designed to make money simple, actionable, and stress-free. Remember, it's not about how big your fund is at the start. It's about starting, staying consistent, and growing your safety net over time. $97 today can be $1,000 tomorrow if you follow a plan and stick to it. Take control, build momentum, protect yourself, and your financial life will thank you.